1 month, we've created a report card of our most valued startups, delving deep into what is working and what is not. But today, we're going to look at India's startups in the travel and hospitality space, and Arundhati is standing by to give us those details.
The global travel and tourism industry went through a tough period during the pandemic, but bounced back quite quickly post the pandemic. The global market is set to surpass $8.9 trillion by 2026, growing at 3.1% CAGR from 2021 to 2026. The same can be said for India, with the Indian travel market expected to reach $125 billion by FY27. Let's now take a look at the startups in this space. The COVID-induced ban on travel hit hospitality chain Oyo pretty badly in FY21. However, the company was able to claw back some lost ground in the last fiscal. So let's take a look at the numbers then. Revenues from operations grew over 20% to come in at close to 4,800 crore rupees in FY22, while losses dwindled 51% to a little over 1,940 crore rupees. Employee benefits emerged as the largest cost head for Oyo, forming around 27% of the overall cost. Expenses totaled close to 7,000 crore rupees in FY22, and on a unit level, the company spent 1.46 rupees to earn a single rupee. Valued at $2.7 billion, Oyo plans to cut its IPO valuation by 2/3 when it goes public, as per a Bloomberg report. In a town hall held by the company's chief Ritesh Agarwal, Oyo said that it would reach 800 crore rupees in EBITDA by FY24. The hotel chain is now preparing to file a fresh IPO document as soon as this week, the report added. Next up, let's take a look at Ixigo, which is backed by the likes of Invesco, Sequoia Capital, Elevation Capital, and others, and is valued at around $500 million pre-IPO. Ixigo's revenues grew 2.8 times to 379 crore rupees in FY22 from a little over 135 crore rupees a year ago. A steep rise in employee benefits and advertising costs dragged the company into losses, which came in at over 21 crore rupees. The company had reported a profit of 7.53 crore rupees in FY21. With a 2.9 times surge in cost, the company's expenses came in at a little over 402 crore rupees. Ixigo spent 1.06 rupees to earn a single unit of operating revenue in the last fiscal. So while Ixigo has received approval from the market regulator to list on the bourses, the company is waiting for the right market conditions to hit the bourses now. Now let's take a look at the two profitable companies in the sector. First up, the market leader Make My Trip posted its highest ever operating profits in the December quarter on the back of a demand surge for leisure travel and improved consumer sentiment. The company turned profitable after it reported profits of $0.2 million versus a net loss of $9 million a year ago. The company's revenue stood at $170 million, and the travel aggregator is now thinking about an India listing and is currently listed on the Nasdaq. Meanwhile, Ease My Trip, which is listed on the NSE, is backed by Nomura, HSBC, Sundaram Asset Management, and others. The startup reported a 4% year-on-year growth in net profit, which came in at 42 crore rupees. Now, revenue from operations surged 58% to 136 crore rupees, and the company's EBITDA for the third quarter improved to 59 crore rupees, led by healthy top-line growth and a persistent focus on operational efficiency. Now, the company's expenses stood at 82.5 crore rupees. Now, trends suggest that travelers are back on all travel segments, including leisure, business, pilgrimage, and corporate events, and this will drive growth in the coming years as well.
Well, with that